We want to welcome our audience to the SmithWeekly Uranium Summit. The journey continues. The special event is presented to you by SmithWeekly Research and features two key uranium industry figures who have graciously given us their time today at no charge to us. These two gentlemen are at the top tier of experience and wisdom this sector has to offer, being they have been there, done that, and they did it well. I am the event host, Andrew Weekly, founder and CEO of SmithWeekly Research. And once again, welcome to the Uranium Summit. The journey continues. We urge the audience to allocate attention to the on-screen notes here, as well as the event notes under the screen viewer for important notices and details about this event. Our guest today, Mr. Dustin Garrow of Nuclear Fuel Associates, a consultancy on all things nuclear fuel, from sales to the fuel cycle to nuclear utility relations. During his career, Dustin has successfully sold billions of dollars worth of uranium concentrate to nuclear power utilities worldwide. More on Mr. Garrow's experience can be found on the upcoming screens. And we have Mr. John Borshoff of Deep Yellow, a unique uranium business set up for the next cycle in uranium, led by John and an experienced team having explored, advanced, financed, built, commissioned, and operated the only two notable conventional mines brought online within the confines of the last uranium cycle that took place during the first decade of this century. More on Mr. Borshoff's experience can be found on the upcoming screens. We want to start off by having Mr. Garrow give us a market update and highlight for us the key areas of the market he sees as important going forward. Dustin, it's great to have you back, and take it away.
Thank you very much, Andrew, and good morning from Steamboat Springs to both yourself and John. Yeah, let me just give you a quick update on kind of what see going on in the market. I think the audience is probably aware that for a fairly extended period of time, the 232 petition process here in the United States, which was a request from a couple of the smaller U.S. producers, of which there aren't a whole lot left. This year, U.S. production will be well below 1 million pounds. They petitioned the Department of Commerce to examine the national security aspects of uranium imports into the United States. Now, this really had two facets. One is utility fuel side. And again, they were looking at the countries such as Russia, China, Kazakhstan, but also the Department of Defense. Just as a bit of background, when the Department of Defense needs uranium, it has to be totally acquired, shall we say, from domestic sources. In other words, it has to be mined in the United States, converted, enriched, and processed for the Department of Defense to utilize that material. Now, the current forecasts are that they don't need uranium probably until deep into the 2020s, but then you have to beg the question of, will there be a domestic industry available in order to meet any of their needs? Anyway, the Department of Commerce accepted that petition. They conducted their 270-day statutory investigation and then presented a recommendation to the White House. The next step in the process is the president has a 90-day period to review any recommendations and then make a decision on what the administration might want to do. That really came up mid-July, and to a little bit of a surprise, I think, to some, President Trump made the decision, and the way it was worded was, at this time, I do not concur with the Department of Commerce recommendation, which I believe had to do with some requirements on the utilities to purchase newly produced U.S. Uranium. But he did go on to say that he saw that there were national security issues around the entire fuel cycle. So what he did was to appoint I think it's a 13 department or agency nuclear fuel working group headed by Mr. Bolton, the head of national security. And they were to examine this issue of national security as it relates to the US nuclear fuel cycle. I think there were some people that thought they were going to look at the global cycle, but that's not the case. So we're into the 90-day period that the president allocated to the working group, and that will be up on the 10th of October. To my knowledge, the group is not formally met yet, but there's been quite a bit of work going on kind of directly from some of the agencies and participants in the domestic uranium fuel cycle. And I think there's been some discussions amongst the domestic fuel cycle participants on what would be a decent remedy. Now, I don't know what the parameters of that might be, but I think there's optimism because of the wording from the president that as long as there's a reasonable program advanced or put forth for his approval, something will happen. Now, what does that mean? I'm of the opinion it will probably be kind of utility neutral. I know one of the concerns that the utilities had expressed was that if they had to buy, at one point it was 25% of their future requirements from domestic producers, they could face a very large price penalty in their view versus buying that material in the global market. So I think, the president was probably certainly made aware of that. And so it's one of the factors in this whole evaluation. So in my opinion, I think if the utilities are required to participate, it could be accompanied by tax credits, which offset any payments they have to make over and above what they would have paid for the material under a global market price. And it's more likely, though, the federal government, through the Department of Energy or through the Department of Defense, may step in. They could do advanced contracting. I mean, they could commit today to start stockpiling material that they might need down the road. Under I think it's a Defense Procurement Act, they can give loan guarantees to industries that are declared necessary for national security. But again, I think it will be something that all parties can agree to. So I think we're moving away from the adversarial situation that grew up under the 232, certainly between the US consuming utilities and the uranium producers. Now, what was the outcome, though, for the market on 232? Basically, the market went into a period of hiatus. The US utilities, which tend to be one of the larger components of the spot market, I think they bought about 35%. Well, all the utilities bought about 35% out of spot last year. But the US utilities pretty much stepped back and said, hey, I will wait until the outcome of this because I don't know really how I should go about my nuclear fuel procurement with the uncertainties. The other thing was term contracting, which again, I think you're well aware that the industry relies on for developing and operating particularly the uranium production facilities. The US utilities have very large unfilled uranium requirements starting around 2021, 2022. And they had begun to look at the term market just before the 232 petition was filed. They pretty much stepped back because once again, they said, this injects a high level of uncertainty into the market. I don't know if I'm going to be required to buy US newly produced uranium. So there was, again, a hiatus in the term market. So we saw a period after, 2018, spot market volumes were very significant, almost 90 million pounds against a historic average of around 50. Now, part of that was driven by the new fund Yellowcake buying almost 9 million pounds. UPC bought a number of financial entities began to re-enter the market to take a uranium position. I've seen estimates of 8 to 10 million pounds there. So last year was kind of an abnormally high volume in the spot market. This year, it's dropped off pretty noticeably. Through the month of July, I think the volume was down at least 15%. It was below 30 million for that first half of the year. 2018, most of the activity occurred in the second half of the year. So the market really quieted down. The price that had gone up to close to 29 or actually over 29.10 really dropped off. And the big drop was in March. And so we've been kind of around that $25, it'd been a little lower, 24.50, 20 lower 24s, a little bit higher. But, really over the last, I think, 2 or 3 months, we've been stuck around that $25 level. And there's been some activity, as I said, but it's more traders kind of coming in. Cameco with their purchase program, now that they've got McArthur River on care and maintenance, they were projected to be buying a large volume kind of throughout the year, but seemingly they kind of backed off, and they were participating in the discussions and inputs on the 232. So that kind of also led to the market slowdown. Now, what we saw after the Trump decision in July of that he wouldn't impose limitations, but set up the working group, I think the uncertainty is still in the market. It's not as great because I think the participants feel that we won't end up with a bifurcated, U.S. price versus global price, things like that. But they're still being very cautious. Let's put it that way. The utilities have purchased a bit in the spot market. Cameco has said their latest quarterly call that they will be much more active in the market. In fact, they've increased the volume that they want to acquire by a couple million pounds. And the other thing I've heard is that some of the financial buyers are starting to re-enter the market and begun to pick up some small volumes. That on top, I think the utilities will re-engage the market. And so we should see a pretty active, let's say last quarter. That could basically go into early 2020. But I think we'll see the spot market pick up on volume. And I'm continually being told that there's not a lot of material out there. In other words, the market obviously is in fairly decent balance, but at a price that's really unsustainable. Cameco continues to say, yeah, the market looks like it's going to get better, but it's got to get significantly better. But the other thing is a term market. We do have a U.S. utility has entered the term market looking for material starting in 2021. Not a lot. It's 200 to 300,000 pounds a year, but also quietly, I'm hearing that the U.S. utilities are beginning to approach the uranium suppliers to just get a feel of what do they have kind of out in that 21 and beyond time frame. What might they be looking for in commercial terms? So I think after the October 10th decision, we will see, a real uptick in the term market. So again, what does that mean for the price level? I think we may have seen the bottom for this cycle. And then the question is, how quickly does it start to increase? Do we have, for example, as you're well aware, I'm Chief Commercial Officer for Yellowcake, and it still has more than half of its option with Kazatomprom for this year. I think we used 35 million of the 100 million. So, will they step back in? Certainly could if the price indicators, the NAV and the share price are in the right position. So, some of these other proposed trading companies, Uranium Trading Corp out in Southern California, they may step in. So again, I think we'll see the volume pick up pretty noticeably. But again, the 232 process and now the follow-on working group pretty much let's say, put an anchor on the market as such. Now, as been observed by some of the price reporters like UX, they see this as kind of a coiling of the spring. In other words, the demand is there, but it just wasn't expressed in the market yet. So I think even the long-time market observers are beginning to see it. And the other thing that I think is important is both trade tech and UX are talking more and more about production. I think UX ran an editorial recently on the changing nature of uranium production, how costs are going to have a much bigger effect on the price as we go forward because, and we may get into it later, there's not a lot of options for the utilities, and I think a big part of it is like Rio Tinto. Effectively, the Ranger mine will be done by 2021, which is not far off, and then selling their share of Rossing to China National Uranium basically puts one of the old-time big mining companies out of this industry permanently. They see, real, I don't think they show much interest in uranium long term. So that list of future supply sources is getting much shorter. And the utilities want to diversify their supply, and that's going to become more difficult for them. So I don't know if there's anything else you wanted to cover on the market, Andrew. That was kind of a long-winded summary. But yeah, I think we're now starting to move into the next phase of the market finally.
Well, Dustin, appreciate the extensive update on that, and we'll have some more here in a little bit that we'll bring in some comments and questions based on what you said here. John, what events out there do you find interesting, and what changes are you seeing on your end?
Well, basically, I mean, I look at this thing, and every time you're sort of asked to look forward, it's, you might as well be listening in 2016, 2017, 2018, 2019, and we're in the same position. So with all the thousands of pages that have been written, with all of the overhyped central positioning of Section 232, which is just a matter which is so inconsequential to the whole supply demand dynamic. And that's lost in this narrative because the US, is still got this sort of thinking that it dominates in the nuclear business and it is only 25% of global demand and going to get less and less in that side. And so you've got to be thinking in terms of the supply demand of the rest, even though the US is the biggest singular market, it is disillusioned. It is bifurcated by those plants it's got in a regulated market and an unregulated market. So I think the distraction of 232 is unfortunate. I think the outcome has been clearly shown by markets discounting those companies by almost 50% in value and they don't have much hope in terms of what the review will do. And who knows where the review is? That everybody's trying to do a salvage operation on that. All the juniors, and they're threatening to uh, to cut staff from 3 to 2, and all of this sort of business. So the bottom side for me is the supply demand issue is not looked at in terms of where people should look at it. It's not the US. The US, no matter what happens, will be minor players on the production side. I think that the 25%, as Dustin said, quota that the producers were seeking is done and dusted. It's gone, and and even that was only 3 to 4% of the total global production. And if there is some sort of other uh, um, uh, sort of subsidy. It's got to be looked at in terms of, the US worries very much with whether other producers offshore are subsidised or not. So you've got to, it's got to be as level a playing field as possible. The demand is there, and even look, even if uranium goes from 17 to 29 in the year, what does it mean? I mean, it's so underwater. It's 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 just dealing in the ludicrous in terms of a sustainable industry, and I just wonder when it does break, and I think it must, it'll probably break the $30 barrier, but it'll be in this twilight zone of no, it's not going to make an industry, it's not going to break an industry, and it'll need another catalyst to really drive prices to where they should be. Um, During the whole year, all sorts of manner of things have been tried, and extended shutdowns, buying off this sort of off a market that they can't seem to get to the bottom of, and price certainly is not reacting to it. Be rest assured, if the utilities smelt even had a slightest fear of some shortage, they'd be reacting to it, but they're not. Their big fault is that they argued the Section 232 case wrongly. They think they have got some sort of influence on the uranium price, which they have not. Yes, the producers are price takers, but also the consumers will be price takers, because the market dynamic is an independent situation. It's not, doesn't belong to the utilities, and it doesn't belong to the producer. So when that signal comes out that there are, whatever the issues are, which I have my own opinions about supply, the, the consumers will have to buy what it is, and they think because they spoilt the Section 232 petitioners' objectives, that they'll somehow keep the prices to these levels. Well, that's the biggest false presumption that you could imagine, because it'll have nothing to do with containing uranium price. It was so pathetically small, the US contribution, in terms of what the global supply demand is. So I'm interested as well what this big group can do, and where it will do, and what its focus will be, and what sort of little tricks it'll have in terms of accommodating some producers which are getting even more despondent in the US. And it's not too hot even for the other producers or potential producers the rest of the world. So I see that it's more of the same. Let's say it suits me. I think that inevitably the reality of the whole situation will show itself, and then you'll get a true sort of recalibration of the supply industry, and affected by and supported by good prices. But there is a zone there where it'll be sitting in that 30 to 40. It will be no account for anybody, and people will be forced to play in that zone, and become even more vulnerable. That's all I have.
Well, thank you, John. Appreciate the information and your thoughts on it. I want to go to the screen here and talk a little bit more about the utilities and what they need. Dustin, source of supply. You mentioned Yellowcake. You mentioned some of these trading outfits, et cetera. Do you see the utilities potentially approaching these outfits like a Yellowcake that has inventory, and trying to find potentially a supply deal? And is Yellowcake actively going after a supply deal with the utilities at this point? Can you kind of talk about the needs from a producer and a intermediary point of view, and then also the quantity, and then further how that goes into the trust and the ability to deliver?
Sure, happy to comment on that. And just so the audience is aware, I do work for Energy Fuels here in the United States. I'm also under contract to Bannerman with their proposed project in Namibia. So it's a large source potentially kind of out in the future, um, as well as working with yellowcake. But kind of back on the that are now called the sequesterers of uranium, which really started with Uranium Participation Corporation in Canada, which I think they're now close to holding about 15 to 16 million pounds. And I know, as John is well aware, that that's been around for quite a while. And their ultimate outcome, they've always said, is that they would be purchased by a utility that needs that uranium. In other words, if the market got into such a state where a large utility saw that risk, as John points out, certainly they could come in and quote take out one of these sequesterers. Now, that is obviously in this market is highly unlikely. And I can tell you that Yellowcake has been asked the same question. In other words, what's the end game? The company's not actively looking for someone to come and buy them out at this point, because we do see quite a bit of upside still in the value there. But one thing that the sector of the market that's injected, again, another bit of uncertainty, are the what are dubbed the financial buyers. So these are investment firms, and they're spread all over Brazil, Australia, North America, Europe, that did come into the market last year. They'd been a factor in the past, kind of 04, 05. Then they showed up again before Fukushima and all of that. But that, I think, has been now kind of branded the sector that's a wild card. In other words, they came in last year, bought the estimated 8 to 10 million pounds, probably on the way up to 29. So some of the pounds were 24, 25, whatever. When the market started to cool off, there's some indications that they did sell some of that material. And so, and Cameco's clearly identified this group as the ones that are kind of unpredictable. And I'm asked regularly, well, at what price will they sell? How do we model them in? And my view is they've all got their own individual business strategy. So in other words, if you buy at 25 and the price gets to 30, do you say, hey, that's a nice return, and I'll go ahead and sell my holdings? Or do they say, hey, the price is moving up, I'm going to hold? But they're not long-term holders of uranium, so they're not sequesterers, and clearly they're not consumers. So they see this as a pure commodity price play. And so that will be an interesting point, as John said, when the price gets to 30 to 40, is that a range where we start to see this material come back in the market? Do we start to see potential restarts? Now, no one necessarily sees that, and I think Cameco's indicated that they'll hold to a price that's above, say, that 40. But I've heard rumors of 45 to 50, whatever. But and I think, as John hits the nail on the head, if the price kind of stalls in that pick 35 as a middle of the range, at some point the Kazakhs say, well, we can make money at 35. We'll restart or expand some of our ISR production. That's when it's going to be an interesting zone to be in. But then you go to the utilities and you say, well, what are they really looking for? And for all of the midterm carry trade transactions that have been done, I think they still see that as kind of a stopgap. In other words, they can dilute down. The U.S. utilities last year paid on average just under $40 for their delivered uranium. And most of it, again, was they took 40 million pounds in and bought 6 in the spot. So vastly influenced by long-term contract deliveries. And so they've diluted down a bit using carry trade. I understand the the carry trade market, which we know as Itochu Traxxas, Macquarie Bank has become a big player there. They apparently are approaching the utilities now saying, hey, you can trust us. You can rely on us to be, your long-term supply source. I think the utilities don't see it that way. I think they now see that as a part of their mix, but they have to start to get serious about more traditional long-term contracting, which, as the factors that you've put on the slide here, it's, security of supply. I mean, one of the premier utilities here is Duke, and they've got 11 reactors consuming 5 million pounds a year. Now it's all in regulated markets, so they don't have to deal with competition from natural gas. But they've said, hey, we really need to make sure that we've got fuel for these units. I mean, yeah, we can, monkey around with, carry trade and stuff like that, but it's not going to be their primary source. And then they have to start looking again at reliability of supply. I mean, there are some big US utilities, for example, that have never signed a contract either with Russia or any of the Central Asian producers because they don't see they question their reliability. Now, of course, a lot of the utilities have done that, but they have to make sure that material is available. I mean, that's part of that's one of the end game issues. So, but then they like to diversify. So they want to have a basket or a portfolio of various producers. I mean, most of them are going to sign a Cameco contract. They may buy from Orano. They don't sell just natural U3O8. They sell the more advanced products. So that's kind of the tricky part because then, depending on how you evaluate that risk profile of future delivery, you probably want to put producers that are planning to produce. Say for example, I know that Berkeley got a contract with a U.S. utility for production out of Salamanca, which looks like it's either going to be noticeably delayed or not ever come into production. So all of that has to be kind of put together. Then you develop your inventory strategy. In other words, if I've got a bit of a riskier mix, I'm going to have to carry more pounds in inventory, which raises your costs. So, they do have a bit of a complex calculus. And as I said, I think it's going to get more difficult just because there aren't that many producers available. So, and BHP from their marketing, they tend to also kind of have a bias toward the spot. So I'm assuming if they're about 8 million pounds a year, only about half of it is put into term contracts. So, I think that's kind of, some of the challenges that the utilities face. And, as John correctly again pointed out, they don't see a shortage or they would be a bit more active. But I think it's kind of a more cautious, let's look at the market, what should we be doing? And I know we may touch on the other parts of the fuel cycle, enrichment and conversion in another question, but I think the situation in conversion has really gotten their attention. But so in general, that's kind of, I guess, an overview of what I'm seeing the utilities doing. Some of the Eastern European utilities have been out buying term enriched uranium product. I think that's an area where, for example, Urenco and certainly the Russians are very active. So they're buying more advanced forms of fuel, but it's the smaller utilities that have been doing that. So in general, I think those are the factors that the utilities are. They took, I guess, again, a breather during the 232. I'm not sure they used it to do all their due diligence, but I think we'll start to see them more and more in the market. And and John, I know is well aware, once the bigger utilities start to contract, then the smaller guys fall in line. The logic being, well, they must know more about the market than I do, so I better get out there. And the other thing, and John, you'll appreciate this, I took a look at the on market versus off market volumes. Now, what does that mean? You know, on market is a utility puts out a formal request, like Duke. They have a formal request. Here are the years, here's the volumes, here's what our wish list is. Um, Only about 30% of the contracts for term delivery since 2001 have been on market. So, in other words, 70% have been done with just direct negotiations. So that does get into some of the newer producers. I think they're having to realize that you've got to be out there meeting with the utilities and letting them know what you think you have, what's the time frame, what are your price needs, which are certainly well above $32, which is the published term price. And so it worked kind of on both sides. The utilities have to, you know, make sure they pulse and do due diligence on the market if they're not going to put out a formal request. And then on the producer side, they've got to be in touch with the utilities onto what their plans are. Um, and you kind of, you know, that's where there's a meeting of the minds at some point, and that's where the contracts come out. So again, I think that's kind of where we are. This is going to be a part of the next phase of the market. Everybody focuses on spot. It's become the touchstone, but it's really going to be those discussions and contracts in the term market. And those meetings haven't taken place. And John, you'll appreciate this. I had one of the big utilities say, you know, the producers don't really come to see us as much as they used to. Well, they can't afford to. They've all cut back staff, including Cameco, and you know that quarterly meeting we used to have in the utility offices. Now it's maybe semi-annual or annual, so they don't have as much contact, you know, with the producers. But the producers don't have a lot of extra budget available to send their marketers around, you know, to talk to utilities. So in any way, you know, there's a lot of quote data, you know, production cost studies, and you know, as John said, thousands of pages are put out, but that really doesn't give you the whole story, you know. So anyway, I think we're, you know, like I said, we're entering a very interesting phase of the market, and we'll see how it comes out.
John, I want to ask you for your comments real quick, and also including kind of with this a question for you, John. In which way will China secure future uranium supply, and in the Middle East, including India? How will these nations go about securing their supply, and with who?
I'll answer a little bit, fill in a little bit what Dustin was saying, and just my opinion on warehousing uranium companies and what use they are in the sort of fueling system and the financiers. These are what I commonly call castrated bulls. They have no production capacity, reproduction capacity whatsoever. So what they do is what they've accumulated is only what they can sell, and they will not, apart from even the one with yellow cake that's made it appears to be a contract for an option for product, but it's only if Kazatomprom wishes to give that product. So if there's high prices, none of that'll dry up straight away because it'll go straight from primary producer to the end user. Financiers is sitting there in their all their little clever mathematical sort of algorithms and models, and looking at 4% profit on the coupon is something to write home about. There's no new producer apart from these young pups that are going to make some mines that'll ever do a term contract with these guys. There's no need. There's no need for producers to do supply deals to financiers, and then that financier becomes the one that does term. And even when he does term, he's vulnerable because he's caught in the middle that he can't control, he can't hedge, and all of these sort of things. So I see a short lifespan for these people. It was different when the US was a big market, and I just see them that they will cop out. Um, Newcomb was a company that had sort of warehousing, but it also had delivery every year of Russian downblended material, so they could replenish their product and then they could do term contracts. So none of these financiers or warehousing or the will ever enter into term contracts. They can't. They can't afford to. And the amount of volumes that are needed to supply a global nuclear fleet is so enormous that this is just peripheral, right on the edges type pounds. In the end, it'll be producer to the utility and term contract. Um, the Some of the spot will be picked up by the sort of the traders on the side and doing bit for this and picking up a bit on the in there and filling in. And nobody's going to make a decision to start up a bloody mine because Macquarie wants some product at the cheapest price it can get. Tell you what, they'll get nothing, and it's going to be the consumer that hurts when he's short. The financiers not there, the ones that are sort of trying to pick it up. They can do it now. It seems easy. It's happening, and but it's not a sustainable business. In terms of the Chinese and Indians and the Middle East, they'll I think taking a more traditional line where they sort of can't understand this sort of financial skullduggery or mumbo jumbo stuff. They like it that if they want lithium, they'll get a lithium mine and get equity in it and get that supplied into their battery business, or if it's uranium or copper or whatever. Um, the Middle East will come into that area, and they will probably want to have some representation in the producer, have some involvement on the production side. So they'll be quite a cornerstone in the nuclear programs. Um, uh, India, when and if it can get its act together, will be along the same lines. But even China now realizes it has to affiliate much more with capable mining people and not their own, who are not necessarily the best miners in the world, as evidence is showing on various enterprises that they've tried outside of China. So yes, that's a source. It's going to be a mine to the producer. Probably not much middlemen in there, and
Okay.
that's yeah.
Well, Dustin, I want to ask you, go back just briefly, Dustin. Can you just talk a little bit about the fuel cycle capacity and how that might structure utility strategy for their increasing demand for uranium? Can you just speak briefly to the fuel cycle there and how that might affect utility strategy?
Sure, more than happy to. I don't spend a lot of time beyond the uranium sector, but I certainly keep an eye on it because, as you say, it does affect how the utilities look at the market. So let's start all the way out at enrichment. And I think you're probably aware the Fukushima accident caused a major disruption in the enrichment market, which is basically SWU, separative work units. And at the time of Fukushima, the SWU price, I just happened to look at it the other day. Um, where was it? It was like 125, 155, and then it dropped down to $35 eventually. So we saw not only the uranium price kind of fall through the floor, but enrichment. And now what's happened there, I mean, as you know, the big enrichment suppliers are Urenco and Orano with their centrifuge plants. and the Russians. The Chinese have been dabbling in the SWU market a little bit, but are not big players. But the uh, Urenco is really the big, I guess, not swing supplier because they're a fundamental supplier of enrichment. But they made it very clear in their most recent financial report they're not replacing centrifuges. They're not, they were going to try to build another plant in the United States. That's gone by the boards. So the SWU side is starting to, the price has gone up to about 45 now from that 35. So you're starting to see a little bit of activity there. But in general, the sense is enrichment, there'll be an abundance of it for quite a while. And the producers are going to have to be, competitive, let's say. I think that market will rebalance quicker than some have thought. Urenco has been doing quite a bit of underfeeding. I think anywhere from 6 to 8 million pounds equivalent uranium each year, where they basically operate their enrichment plants at a different tails assay than what they're contracted to the utilities. But what they're doing is laying that material off into the future. They're signing long-term EUP deals, so they don't have to go to a uranium producer to get the feed material. They're actually stockpiling what they're getting now under the underfeeding. And they did a big deal with Korea. I think they're active in Eastern Europe doing some of these smaller EUP deals. Now, the U.S. utilities will do EUP deals, but they still seem to be focused on the components. So, in other words, they want to do their own uranium conversion and enrichment. So, I don't see them, embracing in a big fashion long-term EUP, although they could make it again. It's just like part of their procurement portfolio. So if an EUP deal looks really good, and it's a Urenco, which is a large Western, very significant reputation for delivery, I think they could look at it. But no, I think the future is going to be the U308. Now, the one market that has really entered an interesting phase is conversion. It's always kind of the small guy in the fuel cycle, but it's critical. You have to have the U308 converted to natural UF6 before it goes into the enrichment plants. What has happened there is, at the time of Fukushima, the the conversion value was like $12 a kilogram, which is how it's denominated. The price dropped down to, October of 17 was 450. So again, a significant drop in the price, and it made people like Metropolis, which is here in the United States, Converdyne does the marketing, clearly uneconomic. But now keep in mind, I'd say a guess, more than 95% of conversion, having worked in Converdyne, is delivered under long-term contracts. So, for example, Converdyne didn't start to see that drop until I think around, 17, as those contracts had expired post Fukushima. Well, now what they did was they extended a shutdown of the Metropolis plant, which produces the capacity 7,000 metric tons per year. And I think total Western capacity, counting Comurex and Cameco, is about 35. So it was, 20% of Western capability. The Russian conversion, for example, Western utilities don't ship their Western uranium into Russia for conversion and then back out for enrichment in the West. So just looking at the Western sector of the market, so Converdyne went ahead and shut down Metropolis, and it's now on care and maintenance. So that's happened, now almost 2 years ago. But much like what Cameco adopted, ConverDyn then entered the spot market and bought up, the word is virtually all excess conversion to deliver into the remaining portions of their term contracts. And so the price, which was again 450 in October of 17, was reported at $19 last month. And so now there's a big focus on, well, what does this mean? Um, and the word is, even if Metropolis were to come back on, the market's not going to drop below about $15 or $16. Apparently, Orano has said if the decision is to keep Metropolis shut down or go into decommissioning, they can expand their new conversion plant, but it's $18 a kilogram under long-term contracts. So again, what the utilities are seeing is a crucial sector of the supply chain which was under huge stress. And now the price is just, yeah, I mean, it wouldn't surprise me if it's 20 this month, um, has
Right.
really had a significant uplift. And, you know, a main supplier has said, yeah, we plan to come back into production, but much like Cameco says on MacArthur, the prices have to be significantly higher. And it wouldn't surprise me because I'm not aware of ConverDyn out doing a lot of term marketing right now. So they're basically saying, hey, we'll wait for the market to come to us. So all of this then gets worked into the utility, like I said, the calculus on, well, how do we cover off our future needs? Do we do more EUP and let, Urenco somehow worry about the conversion? Or should we get out there and start signing long-term conversion contracts at, I think the long-term price, there's backwardation, is around 15 or 16. And hope we're not embarrassed if somehow conversion drops back down to 12 or 10, which I just don't see happening.
Right.
But it's hard to take those contracts upstairs in a utility when they'll go, well, wait a minute, what happened here? Didn't we know this was coming? So again, this is all, we focus pretty much on the uranium side, but the utilities are really getting potentially squeezed, certainly on conversion, and enrichment is starting to strengthen. So
Oh,
there's a lot of question marks, a lot of boxes to tick, as they say.
right. And the price of SWU and conversion is on the increase. So that's an interesting sign for the market. And then also the timing of these expansions, how that is going to play in, is also a key point to remember. Probably longer term than people think on those
Oh yeah.
capacity expansions. I want to go to the screen, John. Uh, Really, the demise of the majors, the BHPs and the Rios, really just disinterested in the market. Can you speak to the situation in the junior market, smaller producers and hopefuls, that likely there's not too many suitors out there for a buyout? Can you kind of speak to the demise of the majors and how that filters down into the junior market and some of these hopefuls who would hope for a buyout but are maybe going to be forced to actually do something?
Right. So when you look at the whole evolution of the nuclear electrification, the market outside of the US, which the US was driven by hundreds of small mine, or at least 70, 80 small miners working into cooperatives, and this whole process fed the domestic market. On the world scene, though, Canada was essentially with government. It was only Denison that came in. Out of Australia, it was the Rio or CRA and government organisations. So the majors have been a main part of sort of the supply side and the investing side, and most have joined up or have been part government, um, or big multinationals. And as things consolidated through various events, 3 Mile, Chernobyl, and all of this, the smaller groups, and then the majors even dominated even more. And the industry got used to these big, deep pockets, and companies could supply. They had tier one projects, and there was some sort of surety. And juniors haven't really supplied that much into the fuel cycle, apart from what Paladin, and that's where you got to understand Paladin's achievement and what it did in the modern era. In this whole process, the everybody got caught with their pants down a bit, particularly the majors and that pre-Fukushima period. And what happened was they started looking at their own requirements, and they became buyers of deposits the juniors had. And this became a great exiting strategy for juniors. There was no expertise. They could develop a deposit. It's very much like the prospecting industry in Canada, where a lot of the juniors really work in this place of finding nothing, having nothing, finding a deposit, and on selling it, and have no desire ever to develop it. So that was a good model, and there's about 4 or 5 companies benefited from this. And now, post Fukushima, with the juniors, with the senior, the majors I mean, Rio is effectively out of the industry, and that's a big vacuum that people don't fully appreciate the loss. And they say, oh yeah, well in its place, then you've got the big German utilities, but they're nothing like the Rio professional miners, where they really know what they're doing, even though sometimes we have a bit of a laugh about their sort of institutionalization. BHP, as Dustin said, they play in a peripheral market, in the sense it's a byproduct. It's really a marker to decrease the price of copper, and they get a bit of an offset there. And they're important because they will always be there as far as a long-term producer, but it's not driving their whole sort of business model. What's happening now is the juniors really have to stand on their own 2 feet, and there are no buyers. And in that side, you can't see Cameco. They're caught up in their own sort of mindset and what they're going to do, and they're not looking out for any other sort of. They did a bit of a purchasing expansion into the Australia, and I think they've had enough of that, and they will just consolidate around what they have. The Orano is still a wounded corporation. It's still to get its sort of full flying wings. They're under scrutiny, and they're not in a very good position, I believe, in terms of where once the old Arriva, or now Orano, were. Kazatomprom, they huff and puff and blow and all of this, and I don't believe they've got the capacity to come in and flood the market. They've done a great job in the sort of first decade. They're now playing in a listed company. Transparency, governance, all of those issues. They really haven't reported on how much of a cash flow problem their businesses did really generate. Hence why Yellowcake got that uranium from them. They sold that because they were short of cash. So the big problem is the juniors now have to stand up and to be counted, and those ones that are, and that therein is the real issue. How are they going to be? Who's going to be? There's very little expertise inborn in-house. They'll try and make deals with utilities. They don't quite know what they're doing. Corporately, their marketing guy might know, but their bloody corporate group haven't got a clue in that sense of a whole connectivity, and to understand, look, I'm committing here. This is what I've got to deliver. Can I? So I see this next phase will bring in another element of risk that will need to be addressed. It isn't being addressed. Everybody just looks on, as I say, and Dustin said a very good point. How you talk to your shareholders and how you talk to the utility business are two different things. And this, at the moment, those stories are mixed, and it's the same. It's the same promotion pack that goes to the utilities that goes to the shareholders, and that doesn't work. And so reality there has to bite, and I think that in the next sort of 5 years there'll be a really interesting a fallout on all of this.
Well, good points. Dustin, I want to move on to some other questions. Tell us in detail about one of your best supply deals closed during the last cycle. Tell us how it originated, what conversations took place, what were the price terms, and what was going on in the market at the time. How did you feel when you got that secured? Kind of walk us through this. And do you see that same type of deal happening for you in this cycle?
Well, yeah, and John will probably get a chuckle out of this. After I looked across my 40 years, I actually chose the Paladin bankable contract portfolio for Langer Heinrich. Because that to me was kind of the one of the shining success stories as part of the Paladin overall story. Basically, when I was brought in by John, we were beginning to look at the uh, development of Langer Heinrich. And John, you'll like this. I came across a presentation I gave to the board in May of '05, which kind of summarized the sales program. And what we did, meaning basically me on the marketing side. But keep in mind, the marketers have to coordinate with the technical operational development side. When you go out and talk to the utilities, you've got to have a pretty good feel for how much and when and what kind of terms can be considered. But what we did was, first of all, do an update on due diligence with the utilities. I can remember a trip to Europe, a trip to Japan, and then a lot of meetings in the US in a pretty short period of time because we were working, to get those contracts in place quite quickly. Um, so then that led to a list of high potential candidate utilities. In other words, based upon what the development side was saying, and what the banks were saying that they needed in the way of bankable contracts. Now, what does that mean? Those were a specific commitment of deliveries at certain price levels. So again, we were focused on base price contracts. These weren't market related. Um, and so we basically laid out, well, here is the high priority uh, targets in those regions. We basically dismissed Japan because their approach to procurement was you started slow, you did kind of starter contracts, they got comfortable with you, yeah, you'll meet your deliveries. Well, we didn't have that luxury at that point. And actually, the Europeans, their coverage was such that it didn't fit well with that phase one development of Langer. The Germans were still at that time looking at the shutdowns and, what are we going to do? And the French are, well, we're covered for the next 10 years. So it quickly kind of went down to the United States. And so basically, we, as I said, focused on, I think it was no more than 10 and probably less than that, utilities. And I just went out and we sat down and I said, hey, the market was, strengthening at that time. The utilities were looking around, they wanted to diversify. They liked the Paladin story, and as John points out, he'd put together a company, as we call it, from soup to nuts, everything from exploration, to administration, marketing, finance, operations, technical services, in anticipation of moving the company forward. And so I was able to sit down, and I can remember in some cases I called a large U.S. utility and said, hey, we need, or how about, based on the market and based upon what we were seeing out there, I think it was around $70. And they said, okay, I'll take that. I mean, again, I think they were concerned enough, as John said, that they were looking at, they never use the term shortage, but let's just say supply challenges. And they liked what they saw with Paladin. I mean, you had to present the whole story of here's where the mine is, here's what's happened in the past. When I went out there, I think John will remember, there was one drill rig working on the resource side. And so anyway, and then so everything kind of came together very quickly, on kind of the let's say 80% of the base load. So there was, I'm like, looks like we'll get there. But John, if you remember, we had a hole which was a couple of years, and it was a couple 100,000 pounds, and I was having a hell of a time filling that hole. And we were
Yes.
actually at the BMO conference when I got the call from the utility, and they said, yep, we'll take that. This was not the base load we'd already put together, but it was another group. And so for whatever reasons, the stars aligned, and we got everything put together to the satisfaction of the banks, and so the funds were there when we needed them. But that's probably I guess, the best example of a new producer, doing, in my mind, the marketing correctly by saying, hey, we've got to get out there, talk to utilities, find out what they need, when it is. Here's what we need. Here's what the market's doing. And, that all came together, and there we were in a short period of time. This wasn't years. This was done, I want to say, in under a year from
Yeah.
start to finish. So, excuse
Right.
me. So I would say that's probably the best example of what I consider solid term marketing, particularly for a new, junior company, which quickly became much bigger than a junior.
Right. Well, it had to be certainly exciting. Pretty interesting stuff, and couldn't imagine what it was like to get something like that secured and at those kind of dollar values and volumes. John, I want to switch over to you. You're dedicated to this sector. Give us an idea how much time you spend on your company, your focus in this sector, and is the level of motivation and effort really needed to stand out from the crowd to really be ahead of the game?
So I'm in a really fortunate position because the I can devote 100% of my time to the work I love, and essentially I'm completely focused on not just on Deep Yellow, but on the whole industry, all its nuances, what those nuances mean in terms of opportunity, how to read them in a different way, which then allows for opportunity for the company, and really try to analyze and dissect and not and not be sort of influenced that much by the general commentary out there on uranium, which I would call in the overall confused. Confused in the sense that 60% have no opinion except to read and repeat what they've read. And so there's not an innate understanding of the industry, and to sort of give some thought of where the differences are, what the changes are, and what then this could allow for us in this period of the company's development. I really love the old sort of saying that to be a good tradesman, to be a good artisan, to be a good diver, to be a good pole jumper, you've got to do 10,000 hours of of practice and training and thinking. And so when I go to a boardroom and even go to my board, and I'm presenting something, I'm presenting it with hundreds and hundreds of hours of thinking about it. and where my opponent has only thought about it for 2 hours or 4 or 5 or 50. And so, and it's not there as a competition, but it's there to 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 look at what where are the real opportunities, and then to give you the courage to spend shareholders' money in that track, and still be flexible enough to change a little bit when you need. The and I look I find the industry diverse enough to give me variety in thinking, and I mean you've got to go from electricity, which is absolutely the lifeblood of the world, and if you're not thinking about that, and one of the resources and how it fits with every community, and how then we as nuclear the nuclear side, how our little bit fits in there, and how all the others are, and there's no sort of one solution in here, and how you promote that to your customers, stakeholders, etc. So I'm more than happy devoting all this time to what I love and what I enjoy, and as I said 20 years ago, there's two shortages the world should worry about: electricity and clean water, and
Yep.
this is
Yep.
and they still remain so. Those two drive everything, and
Right.
so yep, that's my position.
Dustin, how about you, Dustin? What speak to the time that you spend in this sector just briefly.
Well, unlike John, John's full time with Deep Yellow, as he said, so it gives him kind of the luxury of that focus. I've got three different clients, and it's about 3 days a week is what let's just say what I'm compensated for. But at the end of the day, it's every day. I mean, as John said, um, some of us are, uranium bugs. We've got it in our veins. We're like gold bugs. And to me, it is so interesting. Back when I started, it was all about the US, Western Europe, and Japan. Now it's China, India, Middle East. The evolution of kind of that side of the industry. And it's and one thing I hadn't mentioned is John brought me in on the financial investor kind of relation side early on, because he knew the investors were going to be asking a lot of questions about the market. And so that's an area that I still participate in. It's not my main expertise, but setting up the Yellow Cake IPO. I think we had 60 investor meetings, and I really enjoy that. And just as a side note, for the WNA symposium, I was surprised, John, at the number of investor groups that are going to be represented. By far and away the highest level that they're showing in this business. So anyway, and it's the fuel cycle. For me, it's conversion. Having worked at Converdyne, the role that plays. A bit less on enrichment, but so anyway, yeah, every day. I mean, do I spend 10 hours a day? Probably 6 at least, because there's every day some news item on demand, on supply, on what the market's doing. And I just find it so interesting. And there's so few of us. There's very few. I mean, as the industry ages, and as John said, that there's that, I guess, historical perspective where if you've lived through everything from, $7 uranium to 135, and what those cycles mean. And the other is competitive analysis. As John kind of alluded to, he looks at all the other uh, uh, guys that want to develop mines, and you just sit there and you go, well, here's what I think from an expertise standpoint, financing, location, and which ones are actually going to happen. And it's a really small list, because
Right.
again, one thing is the lack of experience in the industry. I mean, the people are retiring, they're leaving, because they're 70, 80 years old, I guess. The last uplift, 10, 15 years ago, there was still quite a bit of expertise around that had come up in the 70s and 80s, and now that's all gone. And that's one thing that doesn't get really talked about much is, when you want to develop a uranium mine, you've got to have experienced people in that sector. It's not iron ore, nickel, whatever. It's got its own set of risks and opportunities. But if you haven't seen them in the past, it's hard to kind of get focused and get something done. So, but yeah, so I mean,
Right.
I'm like John. It's 100% of my time, even if I'm not compensated for it. So,
Right. Now, there's no doubt an industry-wide shortage of talent and expertise. There's no doubt about that. Well, we're about an hour and 13 minutes in here, guys. I want to keep going. Dustin, back to you. I want to talk about how you are positioning your personal portfolio for this uranium cycle. Can you give us some details on some stocks that you might own, how many you might own, and what your overall strategy is to the sector?
my investment in the sector is pretty straightforward. Um, I was asked during the Yellowcake Roadshow, well, why do you work with the people you work with? And I said, well, I think they probably have some of the best opportunities going forward, because it was a bit of a broad brush. I have positions with Bannerman, with Energy Fuels, with Yellowcake, and I think, as John knows, I still have a little holding in Paladin from way back when. So that's what I kind of focus on. And the other thing, and not that it's overly relevant, is real estate in Colorado, because we've had such an explosion here. It's kind of hard to, ignore that. So that's kind of, positioning wise, I try to look at management, opportunities of where these companies will be going. And I think, now as we enter this new phase, I'll probably step back a bit and say, okay, I'll broaden my participation. But, what I look at is who has got credibility in the business, who's got that management and technical expertise. And, there's always the role for the promoters. I've come to kind of, accept that. But I'm it really hinders my view sometimes of the industry, because I go, well, they're never going to produce anything. So it's some of it's business plan, business strategy. As John says, a lot of these guys just want to upsell their properties, and that's going to be tough. So
Right.
so that's kind of how I view the sector. So
Okay. Well, John, I want to ask you, how are you positioning your personal portfolio of stock holdings for this uranium cycle? Can you give us some details, maybe on some stocks that you might own, like Deep Yellow, how many you own, and maybe some of the stages you like, exploration, development, producer? What's your overall strategy?
Well, my answer is very simple, really. I adopt the old simple strategies. If I own a farm, I devote everything to my farm, nobody else's. And I just hold shares in Deep Yellow. Um, that's all I am. I'm a one-shot guy. I've got farming interests, and I don't look around for anything else outside of that. Um, it worked for me the last time. It'll work this time.
Very well. Uh, John, I want to come back to you. Uh, what do you think are the short-term catalysts for Deep Yellow's stock to move higher, given that the uranium price may take a while to move up?
Well, I think first of all, it'll be the consolidation of the strategy that we've maintained and held to for the last 2.5 years, and that is delivering on what we said we would in Namibia, and that's a real sleeper. And this year, I'm anticipating we will really we be touching on the economic sort of consequences of that on in-house scoping studies, and putting a little bit more effort in getting to our sort of 120 million target zone in terms of resources in that area. So that's, and people will start seeing all of a sudden this illuminating as it's as it shows up on its economic sort of parameters, and as we set ourselves off, and if people have a little tick sheet, I'll say, geez, they've ticked that, they've ticking that, oh God, they've ticked that as well. Now they're going to tick this. This is really quite something when most uranium companies are static in that sense. And I'm talking static, those ones that I believe we're closer to uh, being a developer than some people may think we are. And I'm just sort of pacing it to the timetable I believe we need. So I'm not looking at other people what they're trying to say, and they're going to develop at $40 and $45. We've got a price curve. I'm not going to disadvantage my shareholders by ego and saying I'm going to be the first. There's going to be a shortage out there. I believe it, and
Yep.
you know, people have invested in me because of these. The second one is on the sector consolidation, and if we start hitting a few a few sort of scores on that side, people will say, "Oh, geez, they said they'd do that. Now they're actually doing that as well." And a first hint of that is this really quite remarkable share this capital raising I did with very highly reputable deep pocket funds out of Australia, who with a raise that sort of $11 million a couple of months ago. No hassle, no big deal, no warrants, options attached, just looking there for the intrinsic value of what they believe the story of a sector consolidation, and they're indicating. I hope the shareholders that should something come up, they're willing to back me on that. So in a contrarian play, it's not actually only the idea that counts; it's having the financial support to carry out those ideas. And certainly this capital raising has really, I think, reflected fully on that. So I think the next 12 months will be one where our strategy, which I believe is aligned more correctly. There's other strategies, I recognise that, but one where we're still a way off from uranium moving to prices where I think there is fatigue out there. And during this year, I've just made a note. Cameco, another mothballing, didn't work. Berkeley buggered. ERA shutting down. Rossing sold to the Chinese. Husad continuing to have problems. Section 232, a distraction. Uranium equities are being hammered, um, and uranium price is sort of limited. This is in the end the backdrop I'm working on, and I believe what I'm doing in Paladin is exactly what should happen to value add and create value through this sort of getting the company to where I think it should be at this time of the cycle.
Right. And yeah, I think that's interesting, and certainly would point the audience to consider what's going on there, and your comments on the situation, because they certainly aren't the mainstream views. And also, I would point the audience to the screen, the strategy for investors. I think that these components are also important. Dustin, I want to go back over to you. There are likely some companies and management teams in the audience that are listening. Why should they engage your services?
Well, without being big-nosed about it, and John knows what that means. Um, as I pointed out with the Paladin portfolio on bankable contracts, in my mind, these projects are not going to move forward unless they have a strong portfolio of long-term, well-defined sales agreements. Now, I don't care who you approach for your financing, be it a sovereign wealth fund, be it export credit. I know some people are looking at that. I think the sources of financing, funding, are always going to say, "Hey, where are you going to, show me that the market first of all gives you credibility and signs contracts with you, and I'm going to get my money back, or I'm going to get a good return here. So I think that's, there's not a lot of us left that have that kind of background. Now, some of the guys that are floating around out there, came out of the big producers. And as John well knows, and as he just mentioned, they have a certain mindset. And it's usually give the customer whatever they want, just to get a contract. And that really doesn't work for the smaller producer, because keep in mind, if you've got a project that's going to come on and produce, let's pick 1,000,000 pounds, yeah, you're probably going to have 4 or 5 contracts, because the utilities aren't going to sign up, and you don't, as a supplier, want to have like 1 or 2 customers, because they are all different. People kind of see them as a faceless blob, and they're not. And that's part of the knowledge, I think, that uh, you need as a new producer. On just don't sign up with the first guy that you walks in the door. Um, so anyway, I think that's kind of what I bring to the party, and kind of a decent understanding of the investment side. In other words, what are the investors looking for? So, and that I think also comes into the mix on the marketing side. So it's branding the company, it's understanding the projects, uh, to some degree the competition, what they publish and what they think they're going to do. And I try not to throw too many rocks at the competition, but you go, hey, just take a look at the failures. They just never have made it. So that's why I'm kind of careful on, who I try to align myself with, because people notice. I mean, I actually on a let's go on a big nose comment. I've had a couple of fuel managers. They told me back in the mid uh, 2000s. They said, when you joined Paladin, because we know you so well, we started following the company. Because one of them said, I didn't think you would align yourself with anybody that wasn't, have some reality, or a decent pending reputation, I guess, as a producer. So I think that's all part of it. And it's a historical perspective, I guess. One thing that just popped into my mind when I was at Portland General Electric, the resource planning guys looking at generation, this was 19 mid 70s. We're looking at electric vehicles. And I thought, you're kidding me. There's no way. Well, lo and behold, that's happened. So anyway, I think that all of that put together, uh, I think brings value. So, and the others
Okay.
being, I think, and John may comment, a fairly straight shooter. I usually try to not tell people what they want to hear, but what I'm seeing, like in the market. So,
Right. Well, John, I want to switch back over to you and switching gears to another topic. What are your thoughts on the Alligator River uranium region? Can you describe any experience or knowledge gained from this area specifically?
Well, the first discovery over there was a deposit called Narberlek, which was discovered by Queensland Mines, and the and from there, Ranger was discovered shortly after, and Jabiluka, and it was a fabulous period of discovery. Then there was a lockout through land rights, and the whole Arnhem Land where East Alligator is was effectively locked out to any exploration. I was the first guy to negotiate access agreements into those lands, and through the German company I worked for at the time, and we explored there heavily, and spent a lot of money looking for Ranger type, unconformity type deposits. And they were landmark agreements. So I mean, this gives me, and I think about it, when I'm involved in the company or in a group or Paladin, I'm always the first. We're always doing the first old things, and then even with a group like the Uranets with the Germans in sort of 83, that had happened. So when Uranet moved out in 91, these properties were sold out to to the French, because the French had failed in the Athabasca in the sense that they had no deposits they controlled themselves, and they're all sort of co-owned with Cameco. So they decided they would come out here, spend huge amounts of money on those properties, and of course didn't discover anything. When they then pulled out, Cameco then, who had presence in Darwin, bought them and or took them over, and then they worked and they made some little discoveries, spending a huge amount of money. Those are the properties now that you're talking about. The various companies are looking at, because Cameco also pulled out, and they're sort of now putting money on prospects and projects. The East Alligator has got high prospectivity, but it's a very hard taskmaster area. It's highly expensive, and for me, probably not where I'd put money in at the moment at this level of the cycle. You'd want to have high uranium dollars to be able to justify it, because you've got to raise a lot of money to spend a lot of money to find something, and that's where I'll leave it.
Very well. Well, I appreciate your comments on that, John. John, I want to ask you on another topic, if you would share a little bit of details here, but what is your total compensation package in terms of annual totals, and how does this reflect your capabilities as compared to perhaps others in the sector who perhaps get highly paid but don't perform sufficiently to justify the pay?
I hate talking about money by myself, and all I'll say is that if people can go to the annual report and look at these incredibly detailed remuneration sort of reports, which nobody could understand very well, but in there that you can sort of filter out some information. I'm sort of paid about $400,000 a year. That's stated in Australian, and the and a 25% bonus if I perform, and that's about it. There's no sort of if I don't perform, or I've got a contract that I have to be paid out on or anything like that, and I just stand on my own performance. The Yeah, and I get incentive shares for which are loaded to the shareholders' favour, and it's yeah, that's where it's it. And by the way, and that's about $280 where I get paid. But that's there. If they want detail, they can have a look in the annual report of the company.
Okay, and what about when you look across the industry? Do you think that some are overcompensated? What's your thoughts on overall industry compensation? Is it really out of line given where we are in this cycle?
Well, look, it's really hard. I mean, it's what people can negotiate with their boards and where they're at, and what their own personal situations are at. There's a bit more pressure on Australian companies. Australian companies, they can't write into their contract, if there's a takeover, that they're paid any more than 1 year of their annual returns. Whereas in the Canadian ones, they can say that they have to get taken out 3 or 4 times their return. So you've got this sort of cross-border type differences, and yet we're working in a global industry. Um, some are sort of well paid, but it's also to do with input, and and what you're achieving during those years. You could say a lot of the companies have been static, and they what they were 4 years ago to what they are now is essentially recognisable. Where I come from is when I came into Deep Yellow to what it is now, it is unrecognisable in terms of what the company is, what its situation is, where it's growing to, and where I hope it's going to grow to. So, in that way, the when you look at performance, when you look at how how your story resonates with shareholders, and particularly with people that want to fund you, support you, and look at that, you become a real asset of the company. And yeah, it's very hard for me to comment on myself about what I think I'm worth. Naturally, I think I'm worth a lot more than what I'm being paid, but I'm quite comfortable and happy working with what I have.
Right. Well, yeah, no, I think it's just worth highlighting that minding the shareholders while praying for a recovery. That is certainly the case of many of these in the sector, and I appreciate your comments on that, Dustin. I want to come back over to you. Are there any other uranium supply deal makers out there that have some notable experience with the art of the deal that you'd like to mention?
Oh, there are certainly a few, but as I alluded to earlier, some of them have come out of the big mining companies. Clark Beyer, who is an old friend, colleague, we've worked together. He spent, what, 15, 20 years now at Rio Tinto. So that they tend to have a certain mindset. And Jim Cornell came out of New Chem, and he does some work for Your Energy. Uh, uh, Scott Hyman works at VME. He came out of Dominion and Cameco. Not to say they can't get deals done, but they again, they kind of have a different mindset. I've always focused. Let's see, I worked, I guess, for Rocky Mountain Energy, but I was pretty lowly sales rep back then. But after that's been smaller companies, be it Everest, Worldwide Minerals, obviously Paladin. It's a pretty long list. And I think that kind of puts your mindset in a whole different realm. And I think that's a big plus. Some of these guys say, I'm never working for a small miner, a junior. They're kind of like, you know, I was brought into New Mexico trading to deal with the producers because the traders all dealt with the utilities and they didn't want to, soil themselves by working, with either established producers or those that were trying to get into production. So I kind of had an open field and was able to get a hell of a lot done because I didn't have that competition. So I think that's, yeah, there are people out there that it's, like I said, smaller and smaller group. And some of it's attitude. Some of them think that, you've got a thing here about optimism regarding the industry. If I were to be accused of anything, which could happen, I'm always biased on the optimistic side. Not wildly out there with, the blue sky, but rather than the negative. And some of these guys are, price isn't going up for 5 years. It's just going to be a grind forever. Well, then why would you be in the business? That's all. Well, why don't you go and sell shoes? So
Right.
it's just kind of, I think part of it is experience, it's success, and you're kind of, where do you come from on how do you view the future? Let's put it that way.
Dustin, so you consult with a number of sector information sources such as the World Nuclear Association, Yellow Cake, and others. Are there any notable changes of direction with these informational sources with regards to outlook? And with that, are your utility relationships starting to pay attention to answering how they fill new contracts?
Yeah, it's kind of interesting you bring that up. I've noticed, as I mentioned earlier, certainly trade tech and UX are, trade tech has always been kind of on the more optimistic side, meaning that there is a need for more supply. UX has always been, let's call it, more cautious, but I think they're changing their view a bit. And I think the industry is going to be pleasantly surprised at the outcome of the WNA market report, which will be formally presented at the annual symposium. Much more optimistic on the need for investments in the fuel cycle than has actually been the case over the last several of those reports. There's all kinds of limitations on the WNA market report. You can't talk economics. There's competitive concerns. But I think overall, it's a more positive outlook for the supply sector, meaning it's got to have more investment, you name it. So yeah, I think that and all of that helps. I mean, we can say, it's just another that who listens to them. Well, a lot of the utilities in particular default to the bigger consulting firms and their quarterly reports, and it does help form their view on the market. So, but yeah, and certainly investment analysts have become more optimistic, let's say over the last 6, 9, 12 months. So all of that in my mind helps um, when one goes out to talk to both the investment community as well as the utilities. So yeah, I think it's not a 180-degree change, but certainly the evolution is there. So
Thank you, Dustin. John, for the audience, in simple terms, how much uranium do you see Deep Yellow having at the Cornerstone Tumas project that is worthy of mining? And how long do you see that project taking to come online?
Well, I say between 100 to 150 million pounds is what I'm aiming for. On a mineable, you could say 80% of that, and I'm looking that there will be no serious development in this world before or to be production ready by 2023, and or whenever the price reaches those values that I think they should reach, and I believe that how we represent there, we will have utilities coming to us to say, well, look, we trust what you're doing. By that time, I'll have a pipeline of projects as well, and we'll be a real safe haven for for supply.
Okay. Dustin, back over to you. Uh, what is your view behind the scenes on the price indicators like the price of SWU, conversion, and UF6? I know you touched on this. With those prices moving higher, what do you see? What does that really tell you?
well, I think that it's pretty obvious that it's not demand driven. It's, as John says, the demand is reasonably well defined. It's problems on the supply side. Now, enrichment less so because they're still dealing with pretty substantial overcapacity. But I think, clearly in conversion, it's supply driven with the shutdown of Metropolis. And I think we'll start to see that more on the uranium side. I mean, we've had, Gitzel said on the call that with their cutbacks and with their buying, that's a 70 million pound swing in the market over 18 and 19. So, all of us, at some point, that starts to gain significant traction. Let's put it that way. It's just one of several events or strategies that's being implemented. So, yeah, I think the indicators are all beginning to show that. So,
Okay. And John, I want to talk to you about a little bit about outside of Namibia. What other uranium jurisdictions would you look at? And can you share any details as to what and when Deep Yellow will be looking at to add additional assets?
No, I can't in any detail. So where we're looking at is Australia, uh, Canada a bit, and maybe if some things happen, maybe in the US, maybe. But they're the sort of 3, 4 areas and Namibia uh, for various reasons, which I won't go into here and show and indicate that to my competitors. And and we have a very clear strategy what we want to do, who we want to do with it, and those companies have approached us. We're not approaching them. Um, yeah, so that's the pipeline will be around about like what I sort of developed in with Paladin.
Okay. I want to talk a bit about uranium and when that is going to shine again, gentlemen. Dustin, When do you see this market really moving? Do you anticipate a much different market this time and a much higher uranium price by 2022, or should people really expect to wait longer?
Again, I'm biased on the optimistic side, so I think we will. What to me will happen is the term contracting as it starts to pick up. Keep in mind the utilities look a couple of years into the future, so that's the market they're going to see. And like I said, the utility that's in the market right now wants material in 2021. So, they'll see that market in the responses. They should. Hopefully the suppliers are smart enough, and maybe that's, a little too optimistic. And so I think, we could see the price, as John said, next year in that 30 to 40 range. Wouldn't surprise me. We could see a pretty good pop up into the low 30s fairly quickly. And then we could see a bit of a plateau, um, which is really more healthy. I mean, the whole idea when the price ran to 135, then it came off, and that creates all kinds of problems. So I think if we have a decent rational uplift, but it's got to get clearly a lot higher than it is right now. And as if it lingers to 2022, I think as John pointed out, you're going to see more of the potential suppliers drop off the vine. They're not going to be able to make it from here to there. So it actually then makes the future beyond that even brighter for those that are able to make it. So, I think we'll start to see that uplift um, fairly soon. I mean, I would think next year we'll start to see, a spot price into the 30s. So,
Okay, and John, what are your thoughts? 2022, or should people expect to wait longer?
No, I think they'll see the true by that 2022 they'll be able to see the uh, some factors coming in to justify why they've stayed with their investments. I mean, I'm looking at even this year. I reckon two juniors have popped off the market. They're out for all level money, and I think next year if this will sustain, as I say, the sort of twilight zone of the low 30s to high 30s is not going to achieve anything for anybody, and it's more damage will be done in that environment than anything else for reasons I won't go into here, and. But in that one, the utilities will remain still sort of semi-complacent. Um, but when it comes to unravel this whole thing, and when the significant amount of investment is called for,
yeah.
and unpacking all those capexes and opexes and lining them up against uranium prices and how that happens and who and with whom, this is a huge task, and which is all going to be governed by boards that haven't done it before, and people that haven't sort of made it before in these areas. So the prices for me will be sustained only because the very strong filters on sustainable production and investment that will happen, so that the big increase in production won't sort of happen because of those natural constraints, and lack of expertise is another one. Um, so I see it as a sort of a move, but I do think that there will be this interim period, whatever it is, that's not going to satisfy anybody, least of all the big producers, where it's not going to give them a clear line to be here nor there, and with the utility still hoping because this nonsensical low uranium prices, where they think they're giving a lot at $45, and it's absolutely not. There's no value, there's no production going to come in of significance at that level from anyone.
Thank you, John. Dustin, is there any opinion on when some of these physical funds will look to monetize their holdings? Can you share with us at what prices they will see the need to do something and in what forms of both spot sales and potentially long-term contracting? Also,
They can't do.
will these
I'll tell you something. I've got to break in here, Andrew. These warehouses will not enter into long-term contracts. They can't. You have to have a sustainable source of uranium that comes in to feed the term agreement. So all they can do is make their business, and they'll make high profits, but only on the amount of uranium they hold. They haven't got a life outside of that. Only the producers can give term contracts and to give term contracts on 8 million pounds is nothing. You know,
Dustin?
Yep.
this is yeah. And now Dustin could cut in, but I've got to say this.
Okay, well, let me comment. As I said earlier, trying to figure out when these individual funds, for example, let's say outside of Yellowcake and UPC, which they're not going to, at this point or in the foreseeable future, I don't think either of them will be looking to lay off any of that inventory. That's not the business model. But the financial buyers, like we saw last time, we had Goldman Sachs and Deutsche and a bunch of people come in, and then we had the GFC, and so it was an external event that happened, which then forced them to deleverage. So in the absence of that, you say, well, it'll be based upon each individual fund to say, hey, I've made my 25% in a year. I'll get out now. To me, you can't model that. But like John said, we're not talking a big volume here, and it won't hit all at once. Because that was kind of the concern Cameco put forth as well. What are these guys going to do? It'll dribble in here and there. And in a 50, 60 million pound spot market, I don't think 4 or 5 million pounds is going to drive anything. And yeah, I think the utilities will look at these guys and say, hey, you don't have a long-term source, so I'm not really, for the next year or two, sure. We know materials out there, and but other than that, the term market is not going to be where these guys play at all. Now, not to say that some of them don't stick around and try to do the 2-3 year deals, and but other than that, I just don't see that happening. So.
Okay, and that's good comments, John, from you, and also Dustin. Just one more follow-up on that. If the uranium price stays where it is and mobile inventory continues to draw down, and there's not really any spot market for purchases of any size, uh, Dustin, to you, and then I'll get John's comments. Will these funds or traders potentially look at lending material to some of the folks who have to fulfill contracts?
Could, having been involved in the loan business when I was at Nuexco, it really tends to be more grief than it's worth, because one thing is like getting the the security for those loans, and if the market's moving rapidly, you have to keep changing it and all that. For some reason they were going to get a big interest rate or whatever, they might look at it. But no, I don't, the lending thing has never been a big part of the market. And I normally, when the market's under stress, you probably see less of it. It's just like on inventory acquisition, the European and US utilities have been working down their inventories, and people have said, oh, if the price goes up, they may sell more to make a windfall profit. They also say that for the Chinese. What happens is the price strengthens, they start buying more. They're worried about future availability, so it actually goes the other direction. So people really start to see the uranium that you're holding as more dear in economic terms, and they hang on to it. So I don't see the loans playing a role.
Okay, and John, do you have any further comments on these funds and this this lending?
Yeah, I agree with Dustin. I think that first of all, the one you loan it to has to pay it back to you in kind because they'll
Yeah.
want it in kind. And if there's a shortage, nobody's going to bloody well shoot themselves in the foot loaning something. The only ones that'll loan is an overeager junior that can't deliver on his contract, and then he gets somebody else. But this, as Dustin says, this is grief that very few people get out of, and because it's all based on you can't hedge this stuff, and there may be a little bit of business on that side, but not that much, and not so as affect the business of supply and demand.
Okay. And John, I want to ask you another question here. You just raised some capital over at Deep Yellow that you made mention of to bring in another substantial investor. Would you be willing to share with us some of the plans for that capital?
Yes, that's been announced clearly in the material that we released on the ASX, which was to accelerate the reptile project, and also to facilitate our sector consolidation, more in the sense of making the selections and to confirming those selections, and to indicate to the people that we have approached us that we are able to raise funds while very few others in the uranium equity can raise anything above 1.5 million or 1 million.
Okay. And any other comments there? Can you point to, is this going to be part of the potential review and consolidation for certain assets, or is this going to be kind of more focused on Tumas?
No, 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 no. This is the first time that the strategy of developing the company's pipeline and other assets come into full focus in terms of
Okay.
internal effort. Yep.
And Dustin, highlight for us, if you will, for the audience, the reach of depth that you really have with industry participants, which increases your ability for deal flow. Can you give us some details on the amount of relations you have with utilities, maybe just a count or some more details on those participants also in the fuel cycle services side?
Well, yeah, it's kind of an opening comment. The relationship building has changed a lot since I started back in the late 70s through the 80s into the early 90s. There was a lot of communication with the utilities. Now, some more than others, of course, but as fuel groups have been reduced, there's less of that. Like I said, some of the utilities are complaining that people don't come to see them much at all. So I really use normally the conferences because there's several each year, and that's where I see the utilities more than just you don't pick the phone up and call the fuel manager and have an hour discussion, which back in the old days you were able to do that. And I keep in touch with the converters because Converdyn is here in Colorado, and I know the certainly the Cameco people well. But it's more that it's the following what's going on with them on the internet, and then if you have a question, you get in touch with them. But as we know with the internet, there's so much information available. In the old days, you had to carry an extra suitcase for annual reports and all of that that you'd get from Commonwealth Edison back then, or a Southern or Duke or whatever. But yeah, they're just the availability is not what it used to be. So you make sure you're on the supplier list. For example, I got the latest request from the U.S. utility that entered the market, that kind of thing. So it's just knowing who. I mean, some of the fuel managers now I developed relationships with when they first entered as junior engineers in some of the fuel groups. So it's more that rather than long chats on the phone. about what they're up to. But it's seeing them at conferences, and they're used to having that 20-30 minute meeting. Here's what we need, here's what we're doing. They're always interested in what my observations are in the market, and I think that's kind of how the relationships pretty much stay in place. Now, if there's a new person that's come in, like at Southern, they've just replaced the fuel manager. At the Miami conference, I spent, an hour with him on the boat trip in the bay, that kind of thing. So, it's more of that now than, that bi-weekly phone call. So.
Well, thank you, Dustin. I appreciate the information there. Dustin, are there any final thoughts on this market that you'd like to share with the audience?
Well, I guess, again, being biased on the optimistic side, I'm hoping that we're now coming out of the Fukushima period, let's put it that way, and which was aided and abetted by the 232 process, which, again, working with Energy Fuels, I understand why they and Your Energy did what they did. But now I think we're, the price indicators, the market analysts, everybody are recognizing that, we're coming into a new phase, a new cycle. And again, I think, if not later this year, certainly 2020 could be a very big eye opener when it comes to contracting and procurement. So yeah, I'm always like to use the term cautiously optimistic, but I'm now even more almost solidly optimistic. So.
Okay, and John, what are your thoughts? Any final parting ideas and views, thoughts on this market for the audience?
If you listen to me when I first joined in 2.5 years ago, and what I said then, what I said, and I would actually recommend that people take an hour and a half and listen to the summit talk before, and what I'm saying then, what I'm saying now, it's consistent. I'm no different to this way or that way. I'm just saying that the uranium price will be a bit longer than what it will. Everybody is saying, oh, well, it'll be now the next 6 months. It'll be, as I say, the big dynamo will be when the utilities recognise there's a fundamental problem in the supply demand. They are innately not capable or expert enough to understand the supply side, nor are those news organisations that pretend to know a lot and start shuffling around, changing their stories, and there's no change in the. When I joined, I said 2 to 3 years before the uranium price, and I'm going to align my strategies to that because of this nonsense of these one-shot answers. Cameco's mothballing. Oh, everybody expects the price to increase, so their expectations of the value of their own project. Section 232. Oh yes, these are just decoys, and I need a flat period. And this looks like what's happening up ahead. Is going to be a long, hard road of prices aren't going to change that much. Goodness me, they've had every chance in the world to move, and it's a flat line. And now I see the opportunity where I have funds and access to funds that I can get some realistic discussion with some of these CEOs in terms of where the real value does go in an M&A and what can be done to increase value for both parties. So that's where I'm at.
Well, John, I appreciate the final comments there, and really appreciate you handling those questions. I think you have some really solid points to bring up there, and Dustin, appreciate your comments on your final comments there. To our audience, thank you for spending the time with us. We appreciate the question contributions from Cyril O, Peter S, Angel O, Jared W, Paul M, Mike P, James W, Matt P, and Todd A. If you are not aware of, if you're not a member at Smith Weekly and have joined us for the first time on this event, please make sure you check us out on our website, smithweekly.com, and also via Twitter at SmithWeekly. Please reach out with any questions and feedback. If you've determined that we've delivered some value to you today, We appreciate donations to support our research. The link for those donations is on the screen. Well, gentlemen, let's leave it there. This was a high quality discussion, and thank you for taking the time to share your insights and wisdom with us. I want to wish both of you well as we get into the next stages of this and really the real main course of this uranium cycle. On behalf of our guests and Smith Weekly, thank you for joining us and take care.